All right, guys and gals, back in the action once again. Hope you had a great weekend out there, but it's time to get back to work. Monday evening, it's February 3rd, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find the best of the best entry setups using a very simple 3-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. Tonight, my job is really important because tonight, we're identifying the best levels of support and resistance, the best entry setups and the best exit targets, and most importantly, we're talking about the most important traps to avoid in tomorrow, that's Tuesday's trading session. And we have a ton to cover in this first newsletter of a new week and a new month. As you can see in the background, got all the charts all ready to go. We got some oil, some S&P, some Nasdaq, and of course some gold on the charts tonight. We're going to dig into all of those charts. Got a bunch of ranges, a bunch of big clues we'll talk about tonight, so you're ready for tomorrow. And speaking of being ready for tomorrow, got a big day ahead of us tomorrow. Bunch of news tomorrow morning. Got some big announcements tomorrow afternoon. Got a lot to cover on the calendar. I want to make sure you know the best time to trade and the most important times to avoid this first week of the month of February. So charts are ready. I've got my calendar all ready to go for tomorrow as well. I got you here with me. Before we jump in the video though tonight, I want to remind you, make sure you subscribe to our YouTube channel. I don't want you to miss the next great trade setup. So subscribe to the channel. That way you never miss another great nightly newsletter. And when you do, don't forget, hit that bell icon so you always get notified every time I publish something new. And how about questions tonight, especially for all the new folks here? If you're here for the first time right now, if you have any questions about anything we talk about in tonight's video, drop those questions in the comment section below. I'll be hanging out there right after we publish the video tonight to make sure we get all those questions answered. And as always, if you're part of the newsletter crew that always tunes in every evening, the best of the best newsletter every evening, hit that thumbs up button for me. If you tune in every evening, help me support this channel by hitting that thumbs up button for me. It means the world to me that you spend some time with me every evening, right, in your busy schedule. And speaking of which, let's not waste any more valuable time. Let's jump right in. Let's kick off this brand new month with our newsletter here tonight. Let's jump into the economic news calendar and let's take a look at the layout here for this first week of the month. Now, right away, whenever I say first week of the month, you know the big news of the week. The big news of the week, anytime the first week of the month, anytime the first week of the month, the first thing we always think of is the first Friday of every 1 month is that non-farm payroll number. We know that is the crown jewel, right, later on this week. Now, tomorrow's only Tuesday, so we probably don't need to worry too much about that non-farm payroll yet, but you will start to hear me talk more about that as we get later on in the week, right? Come Thursday, we'll start really being more concerned about trading on Friday morning's trading session. What else do we have going on here this week? Well, of course, tomorrow, we get a relatively wide open session tomorrow. As you can notice, there's not a lot on the schedule for tomorrow. The big news tomorrow will definitely be that factory orders number at 10 o'clock Eastern time. And then don't forget, tomorrow night, we actually have the State of the Union address. I'm not sure exactly what time that'll be. It'll probably be something like, 8 o'clock, 9 o'clock Eastern time, right? Something relatively early here on the West Coast if you're here in Los Angeles like I am. So not sure how much that State of the Union will affect tomorrow's markets, but it definitely might affect us on Wednesday. So we'll talk more about that as we go. But as far as major news tomorrow, that factory orders number at 10 o'clock Eastern time is definitely something that we're watching closely here for tomorrow. Don't forget, we'll be in our trade room tomorrow morning together at 8 o'clock Eastern time. So we'll definitely be rocking and rolling tomorrow in time for that factory orders number. And then, of course, the big elephant in the room this week is this coronavirus. Unless you've been living under a rock the past couple weeks, right? We've been talking about this virus. It's been killing oil, right? Oil keeps tumbling. Oil, of course, seems to be at a bottom here right now around 50, but we shall see. So it's been killing oil. It's led to a lot of volatility in these markets, and we'll see how much that continues for tomorrow. I'd be lying to you right now if I told you that I knew exactly how the markets will respond to more updates out of China, more updates from the Center of Disease Control. Who knows what we're going to hear about the virus spread tomorrow. I will definitely be keeping my eyes and ears open tomorrow in the trade room. Right now, every time we hear a new news headline about this virus, we're getting some nice strong moves off those news headlines right now. And anytime we see a strong move in one direction, we know we're going to probably get another leg. And so it's definitely giving us some great opportunities to trade this right now, but that is a known unknown for tomorrow. So we know we have the factory orders at 10 o'clock. We know that we're probably going to hear more about the coronavirus tomorrow. When that will happen and how it will affect the markets, I couldn't tell you, right? I couldn't tell you. Could be bullish, could be bearish. The best thing I would advise you to do is make sure you come out and join me tomorrow morning, 8 o'clock Eastern time, and we'll navigate through those waters here together for tomorrow. Wednesday, as you can see, appears to be the big meat and potatoes day this week. We got the ADP employment number at 8:30. We got the ISM. Remember, ISM. Anytime you see those three letters, ISM, you got to pay attention. We saw one today at 10 o'clock. We saw how big the reaction was there. We're seeing another one here on Wednesday morning at 10 o'clock, along with the petroleum status report on Wednesday as well. Now, don't forget, Wednesday is OPEC day. We got that big 2-day meeting starting tomorrow. We're supposed to be hearing something Wednesday morning from OPEC. I'll keep you posted on that as we go into tomorrow night's newsletter. But Wednesday is definitely setting up to be a very, very busy day here for us. Thursday is pretty much wide open. There's jobless claims a little bit there. But Thursday really could be the day where we may see some chop. We may see some range-bound, situations on Thursday, just because we got that Friday non-farm payroll coming right around the corner here. So really at this point, tomorrow looks really, really good to make our money tomorrow. Wednesday is very much up in the air depending on what we hear from OPEC. And then, of course, Thursday, wide open. So again, tomorrow morning, factory orders, 10 o'clock Eastern time, the coronavirus. It's tough to even say that with a straight face right now. Did they have to name it coronavirus? Gosh, anyways, I'll get over that. I'm sure you're thinking the same thing. I only know one type of corona, right? It's not the virus. Anyways, all kidding aside with you guys, we know the factory orders tomorrow. We know we're watching for that virus update, and of course, we'll get ready for Wednesday's trading session in tomorrow night's newsletter. But a very, very busy week ahead of us. I'm anticipating a very good week in our trade room. This first week of the month is always filled with great stuff. I look forward to seeing you guys tomorrow morning at the opening bell with me. All right, let's not waste any more valuable time. Let's get that calendar out of here. Let's grab some charts here now. We got some oil, some S&P, some Nasdaq, and that yellow metal, the gold futures in the lower right-hand corner. I'm going to jump into the oil first, though, the black gold, the Texas T, right, the crude oil futures. What do we know about oil? Well, we know that we're sitting on, pretty much. I mean, if you were to go back in time right now, we haven't been under 50. Well, we haven't been under sub 49. I mean, you can go back for ages, right? A couple of years ago, we're talking yearly lows, multi-year lows. This is a big deal, right? Not a lot of evidence underneath this. So we know we're bearish. That's for sure. We know we're sitting on a major low, big psychological $50 a barrel. And I think the biggest clue on this chart right now is not the $50 a barrel, right? Which is a very interesting level to be back at, but really it's this big, strong move down, and the fact that, remember, we just talked about this, right? Anytime we see a strong move in one direction, what do we expect? We expect to see another leg in the same direction. So now look where we are. We're sitting right at that, double bottom, if you wanted to call it. But the bottom line is we now have a bear market that pulled back. The bears got what they wanted. They got a chance to give it a good whack and run it back down again. And now we're sitting right on those lows. Right? Now, when something like this happens, when I see a market running lower, pulls back, and then goes back and retests that low here, right? That's the objective. They've now accomplished the objective. The next question is, do we bounce off that low? And if we do bounce off that low, this becomes a range now, and now my job is to sell above the range. Okay, we'll talk about these, by the way, right? Don't worry about that. We'll talk about this in more detail. That's one potential, right? If we bounce off of this low. The other potential scenario is if we continue going through the low, now we know that measured move now becomes our objective. And we're usually looking for chances to sell this thing now as it goes down to that measured move. We may also see a new hidden channel, and we can sell off the top of that hidden channel. So we're really at a crossroads right now here on the oil. We know we're bearish. There's no question about that, right? This they should be giving this market life support right now. It is literally DOA at this point in the day. We know we're bearish, but again, will it bounce into a range, right? Will it bounce into a range? And I think I've got a good feeling for that range is. Will it bounce into a range? We can sell it back down, or will it continue here down to that measured move, as I mentioned earlier? These are really the two main components that sellers have to be watching for right now. Now, buyers really may start coming into this market. Like I mentioned earlier, if you look back in time, you can go to a 120-minute chart, 4-hour chart. Look back a couple of years, and you'll see you got to go all the way back to before, I think it was a year and a half ago, to see anything below this area. Obviously, I'm generalizing here. So we know that buyers, well, let's put it this way. If it wasn't for the market being so heavy, I'd be looking to be a buyer here off of these lows, right? The problem is you've really got to get these bears to overcommit, right, and really kind of hang themselves out up there if we're going to be able to buy this thing coming off this low. I'll bet there'll be a lot of buyers who want to pick a bottom down here. Not a big fan of picking bottoms. Usually you get a handful of you-know-what when you try picking bottoms, but I will be open-minded to being a buyer. I would also be open-minded to a short covering rally. As you may recall, the morning this morning really began in a range, right? It was that move down back into the range, and then really it was just the last half of the morning. The market kind of fell apart right there. That range, if we were to think about a buy side here, that range all of a sudden becomes a big magnet for us, for the buyers, right? So we do have a lot to consider here. There's a lot going on this chart. Let's break it down though, right? If I wanted to be a seller right now, how would I sell this market? There are really two ways to do it. One would be if we bounce off of that low, this becomes a range, right? And what do you do above the high of a range? We sell with a buyer failure pattern, right? We wait for the market to make a run higher. We wait for those buyers to confuse it as a reversal or basically as a reversal. I wait for the buyers to try to buy that pullback, and I look for ways to sell right into those stop losses. I call these failure patterns. Basically, it's a buyer failure, right? Same thing we saw back here. As we went lower, the market ran higher, pulls back to the moving average. You can see the wicks right there, the green candles. The buyers try to buy it, right? And when they fail, the sellers are selling right into those stop losses. We'll do the exact same thing. The challenge we're going to have though is I really don't want to do it in this area here. We're going to want to see this thing poke its head back up, right? Try to get those buyers now to take the bait, literally take the bait. And if we can get those buyers to buy off the pullback, we can sell down into that trading range. You'll also see I've got these lows lined up, connecting the highs, just looking for additional levels of resistance, which again, I got my eyes on that 50, 60 to 51 even area up overhead. Now, what if we go lower? If we go lower, the hard part's going to be we don't have a lot of open space down here. That's going to be our biggest challenge. The real challenge is if you line up these recent legs going down. You might be wondering how I'm finding this measured move here. If you line up these last couple legs, right? There was that gap. Remember that gap from 2 weeks ago? That was one leg down, 2 legs down, 3 legs down. I would imagine there's that major support level there at 49, 49 and a quarter, right? 49.25. We don't need to be exact, just got to be in the right area. So I want to be a seller because we're obviously bearish right now, but how do you sell this thing without getting in too low? That's the problem, right? So here's the pattern I'm looking for as we go lower. It's called a 2-try trap pattern. I want to see a strong move down. That'll be the key. We know where they're trying to go, but I don't want to sell low. I want to sell high. And what's my go-to pattern? When I don't have a lot of open space, but I still want to participate in the move going down to that 49 and a quarter area, it's called a 2-try trap pattern. I'm looking for a strong move down, looking for profit taking, looking for buyers. Remember, I told you buyers will try to pick the bottom down here because it's uncharted territory. A lot of support down here. Doesn't mean I should buy this because it's at support. It's bearish, I want to be a seller in a bear market, not being a buyer. But I do anticipate, right, buyers will try once, buyers will try twice, and I'm looking for a trap high. Right? Trap patterns are my go-to patterns anytime I want to participate going lower, but I don't want to sell at those lows. I want to sell as high as I can get my hands on it, right? And who knows, right? Maybe we do get lucky and we can use the underbelly of that channel. It's not necessary to use the underbelly of that channel, but it wouldn't be, right, bad whatsoever. So now we get a pretty good idea here for where I'm looking to be a seller, right? Up inside this battle zone with a buyer failure pattern, or where I can be a seller down as we go lower with that two-try trap pattern. Now, let's talk about some buy setups here. How could I be a buyer as we go lower, for example? Being a buyer as I go lower, the most important thing is going to be, get this back here real quick. There we go, get that there. The most important thing here is going to be getting that reversal pattern, right? Now, we talked about the buyers failing, right, to buy that pullback overhead, right? We talked about that earlier. That's my sell setup off the high of that range. Think of the same pattern, right? We run lower here. The moving average comes down. Now, do I really feel comfortable being a buyer just into a straight seller failure? Probably not going to be the most reliable trade, right? What I'd rather do is I'd rather really let those bears try a couple times here before I try to give this thing a good little nudge going back into that range. This is a failure pattern, but it's a slightly more conservative failure pattern. And the reason why you want to be more conservative, you probably already can assume, because you're going against the trend. If you really want to put a cherry on top, look for a double bottom or a trap on that last attempt for those sellers. And again, I call this a nested failure pattern. With a trap low, it is a very, very high probability reversal pattern off of that low. Just be aware, keep in mind, these types of reversals, you're going to want to look for them on a bit of a slower time frame, or if you're on a faster time frame, you want to really ignore a lot of the grindy stuff and really make sure you've got the bears trying once, a pullback trying twice. It's a very common rookie mistake. I did this when I was a rookie, where you use such a fast time frame and the pattern is so tight, right? What we want to wait for is you want to wait for it to go up, come back down, go up, try again, right? And in my experience, these reversal type of patterns, they usually take a lot longer than you think they will. They're not going to take 2 minutes or 2 candles, right? So it takes 15, 20 minutes for that market to really get a good setup, right, to reverse back up. Now, speaking of reversing back up here, what would a reversal look like? Here are 2 patterns to watch for. Because like I mentioned earlier, there's a good chance that we get, who knows? I mean, who knows, right? With the virus talking about, right? Who knows? Maybe tomorrow morning we hear, okay, they've contained it, we're good to go. That could happen. This market, like it's on a string, it could rip right back higher here. So here are 2 things to watch for as we try to go back higher. One would be that strong move up, that pullback to the moving average. And remember, if the buyers don't hold it, we're going to sell it back down in, right? But if they hold it, though, now that becomes a 1, 2, 3 reversal, basically, right? If we can get a strong move up, get a pullback off the moving average, and then hold that pullback. Now remember, a strong move higher is not a guaranteed reversal. Look at what happened before. A strong move higher is not a guarantee. So if we do get that strong move higher, wait for the proof. This is why I always say, we can't just guess because of those big strong moves. It's against the trend. You got to wait for proof. Once you got that proof though, now mark up that high, draw a trend line across those highs, bring that trend line down and find that hidden channel. And you're looking for that buy off the low of that hidden channel. Does that make sense? Right? So I draw the trend off the highs, and then bring it all the way down to that low and place it right there. That's going to give you that sweet spot. And then all you need now is to get that pullback. A lot of times what will happen is it'll go just below the moving average. All right, remember, the moving average is a great clue. A lot of times the best trades you'll get is when a bull market goes just below the moving average, or a bear market, right, goes just above the moving average, because that allows you to buy low or sell high. That's called a 1, 2, 3 reversal pattern, right? Because it's 1, 2, 3 reversal pattern, buying off the low of a hidden channel. Now, another pattern you want to think about here Another one here would be, let's just say we do get this market ripping higher here. Again, they pull the string on it. If I can see the two-try trap pattern, that might work too. So strong move up, right? Pull back, higher high, pull back, trap low. That's another one I'm watching for right here, especially in the early part of tomorrow, or the early part of the overnight. Now, keep your eyes on how I draw this. It's a higher high in price. That's the most important part of this, all right? If we don't get that higher high, you don't want to go after that trap. Right? A lot of times what happens is it'll go up, it'll pull back, right? They'll bounce off that moving average, and that's not the pattern, right? That is a buyer failure. Short that sucker back down to that range. But if we see a strong move up that pulls back, shallow pullback, makes that new higher high, now we have everybody piling on here to buy underneath that low. And again, the pattern name is the two-try trap pattern, that two-try trap pattern. The key here is it's gotta be a real strong, kind of blow your hair back, right, type of move going higher. Where's my target? My target's pretty easy, right? Back into the range. We'll definitely try to leave a runner, right, at back around 52 here for those buyers. So now we're looking good. Now we've got a good plan for the buy side, for the sell side. We know exactly what patterns I'm looking for. And for most of you guys, we'll do it together tomorrow in the trade room at 8 o'clock Eastern time. But if you're not going to be with me tomorrow in the trade room, I want to make sure you get a deeper dive into all of these patterns. So here's what I would do. If you're not with me tomorrow in the trade room, grab the link to that free trading course in the upper right hand corner. I'll put all the links, by the way, in the description of this YouTube video. But if you're not going to be with me tomorrow morning in the trade room doing it with me, the next best thing is to grab that free trading course. A little pop up there in the upper right hand corner. Get registered for the free course. That way you can learn more about all of my favorite entry patterns. You'll learn what I call my 3-step trading strategy. You'll see hundreds of examples of how we apply that strategy to our favorite markets. Again, if you can't be part of our trading tomorrow morning at 8 o'clock, the next best thing is to grab that free trading course. Make sure you get registered. If you want to, pause the video. No problem. Pause the video, get registered, and then check your email. I'm going to send you the first lesson in that free trading course. You'll love the free course. In the meantime, though, let's keep this party moving forward here, though, because we got a lot to cover here tonight on this video. So S&P is looking pretty good here. Crude oil looking pretty good. How about some S&P? Now, the S&P is a classic example of it's not what did happen, it's what didn't happen that I think might be the most important clue on this chart tonight on the S&P. What do we know right now on the S&P? We know the market began bullish. We know, if you recall, right around the opening bell, this thing was a mess. When we came in this morning, this market looked like, well, it looked like one of those tight ends in the Super Bowl last night, right? Just getting banged up every angle. It was a mess. Remember what happened, though? Opening bell hit at 9:30 and the market went racing higher, right? But what didn't we see? Pullbacks. There were no pullbacks on the way up to that measured move. And of course, the market, right, 10 o'clock comes out, the market pulls the plug and it runs back down again into what we assume, right, is this trading range environment right now. Now, what's the big clue there? The big clue was if you didn't get aggressive on that move up, unless you were buying, green candles, right, you really didn't get much of a chance to get into that thing. And I'll bet, because there wasn't a lot of notice on, again, if you were watching this in real time when it happened, it was nasty out there this morning. And of course, then it just all hell broke loose, right? It just took off to the upside. And before it could even really give you a chance, it had collapsed right back in. So I would imagine right now a lot of the buyers are really kicking themselves for not getting in, right, when they had their shot. And usually when that happens, those buyers are waiting right back here again to pick that, right, to pick it back up where it left off, right? Almost like a mulligan, almost like a do it, right? Do it over again. Bring it back and give us a shot to do it again. It's a lot like those gaps, right? It's a lot like gaps, right? Nobody gets a chance to trade the gap. They try to fill the gap instead. It's a lot like a gap kind of mindset to this market. So the opening bell breakout was so strong, I think the buyers were really waiting for something, never got it. Right now, another very big clue on this chart, there's a lot of strong moves to keep your eyes on, right? For example, anytime, we always talk about this, anytime we see a strong move in one direction, right, we expect to see another leg. So we saw the strong move up, right? They got their retest and then they came back down. But look what happened. When they came back down, look, they just got their retest right now. So the sellers are just like oil, right? They just kind of just got what they wanted. They just retested that low. So really right now, it really comes down to, do we continue going lower? Which I think those bears are walking right into a bee's nest here to get bought right back up, right? That's where I'll be looking for those buys tomorrow. Or do they bounce off of this low, right? And we start looking for, right, chances to sell above that high, right? A lot of this is borrowing from the same thing we talked about on crude oil. I think the biggest problem we have right now, though, is we're obviously very bullish. Now, I know. Look left. Are you sure we're that bullish? Yeah, no, we are in the short term here. And again, as a short-term trader, I only care about the short-term momentum. If you're a long-term swing trader, then by all means, right? Focus on the long-term trend. But if you're a day trader, you really got to get used to the fact that everything you need on this chart is right there. Everything you need is right there. Okay, this is the reason why I don't go over multiple time frame analysis. Multiple time frame analysis for a day trader is, in my opinion, it's wasted time, right? What you should be focused on as a day trader is who has momentum, where are the counter momentum traders getting in trouble, and how can I exploit those opportunities? That's the way that real day traders make their money in the futures markets. They're not riding long-term trends, right? Because, right, you probably have noticed you could have a long-term bear trend, but then you get 2 or 3 days of markets moving higher here. I want to make money on those 2 or 3 days. I can always ride it back down once it keeps going lower again. So what I'd rather do is ignore the long-term stuff. Just focus on what's happening right now. The world changes so fast these days. I mean, we could be looking at the end of the world coming, and then all of a sudden, good news comes out, and we're back in the action, baby. It's very quick the way this stuff changes. So again, make sure if you're a short-term trader, short-term time frames, right? Short-term momentum. If you're a long-term trader, long-term momentum. Now, does that mean we can't just collapse and go back down to those big lows? Absolutely not. Of course it can. But as of right now, though, the odds are better to be a buyer than it is to be a seller. So we know we have everything we need here. We know the buyers, I would imagine the biggest clue on this chart, the buyers missed their shot. Well, again, unless you were hyper aggressive getting into that move higher, unless you were buying that break higher, which we know in a lot of situations is the wrong trade to take. Unless you were buying aggressively going higher, you missed that move. What I'd like to do is I'd like to get these sellers to finish off this leg lower. Give me a chance now, right, to get involved with those buyers as they load the boat again and buy it back up. So let's talk about the buy side here. How could we look to be a buyer on this market? Well, I've already shown my cards, right? So now I've got my support levels down here. I've got my trading range. I've got that giving me levels of support here. I know where that opening price was. So I know there's a lot of areas of support down there. All we need now is to get this market and make a good old run lower. I'd love to see those bears come in, give it a whack off that moving average. That tells us exactly where their stops are, and we can buy right into those stop losses. Now, if I really get kind of zoomed in on this, what we'll look for is a move down, a pullback to the moving average. I'll look for those sellers to fail off the pullback and then look for that pullback entry as we go back up into that range. We see this combination very often. You'll notice a seller failure into a bullish pullback, right? Again, you'll notice these types of patterns all the time on these charts. So if I can get those sellers to make a run lower, get those bears to take the bait off the moving average right where we want to be buying, right where buyers who missed the boat earlier are trying to get back in again, I can be a buyer now right into their stop losses. And again, oftentimes what will happen is you'll get a quick one-to-one target, and then it will pull right back to the moving edge and grab it again. Right? Now, sometimes what happens is the market will run down, and because everybody is so aggressively trying to get in, all you get is a failure and the market runs back in. If that happens, I'm looking for a 2-try trap instead of a pullback. because you might not get the pullback, right? So if you do get that two-try trap pattern, we talked about this earlier. Remember that two-try trap pattern we mentioned earlier, right? Higher highs, trap low. That's another scenario I'm watching for on that pullback, right? Buying off the low of that trading range. Now, how else could I buy it? What if it runs higher? What if it runs higher? If it runs higher here, this is very similar now to how you would approach this, like we talked about, like on oil, right? With oil going lower. But if we go higher here, I know where those buyers want to go. They want to get back up to retest the high. So if I really blitz higher here, profit taking for the buyers, higher high, trap low, right, for those sellers, and we're buying that trap low. It's the same pattern that we talked about for oil. Remember, oil was trying to go lower, and I was worried about selling low on oil. There's the same thing now in the S&P, right? The S&P is overall bullish. That big run higher here, they're going to want to get a retest of that high. Again, step one, strong move up. Pullback number one, higher high. Pullback number two, if I got to get a trap high up there. Trap low. There'll be a trap entry pattern. The pattern's called a two-try trap pattern. I like using traps. Why? Because I don't want to buy high. I want to buy nice and low. All right, beautiful pattern here as we go higher here. And then who knows, right? Maybe the market, maybe we don't. Maybe it goes 1, 2, 3 and launches. At that point, mark the high, mark the low. We're buying the pullback right off the low of that hidden channel, right? We may not get that two-try trap. It may just pull back and run. If that's the case, right, find that hidden channel and we'll give it a good whack off the low of that hidden channel. That is again called a 1, 2, 3, right? 1, 2, 3 reversal or 1, 2, 3 breakout, right? Into a hidden channel pullback. And again, guys and gals, I'm just simply marking up the charts, getting ready for tomorrow morning's trading session. If you're not with me tomorrow at the opening bell, make sure you grab that free course that we can learn more about these entry patterns. And again, I'm going to put all the links for you in the description of that YouTube video. Make sure you grab that. Now, how could I be a seller on this? How would I sell in an overall, and again, I realize long-term trend might be down right now, but short-term trend is still very much bullish. How do I sell this market? What's the best way for me to sell above this high? Because I definitely can, but what's the best way to do it? I want to go up, let the buyers try twice, right? Remember that? It's called a nested failure. 1 try for the buyers, 2 try for the buyers, and again, if I can get a trap high on this one, trap high is a cherry right on top, right? That would be ideal. I don't really need a trap high as long as I can get 2, right? 2 distinct separate tries. And again, don't go looking for these on a 144 tick chart, right? Look for them on a 1500, 2000 tick, right? Get something that's not going to be very fast that we can actually see those 1, 2, and you're looking at the big swings, not the small little grindy stuff, right? They'll give you false signals. And again, we'll do it together tomorrow in the trade room. Now, what if we go lower here? Right, as we go lower here, right, how do we get short as we go lower? This is going to be the tough part, right? We're going to have to see either a 1, 2, 3 breakdown, mark the low, mark the high, and sell off that high, right? That is, again, the 1, 2, 3 reversal, 1, 2, 3 breakout. Where's my targets? Your targets are pretty easy going lower. Everybody wants to get down to that 32.12, or we make a run for it, right? Make that run for it. Strong move down, right? And remember, at this point now, a seller failure would have that, right, have that higher low there. As we go lower here, 1, shallow pullback, 2. If I can get a real strong move down, right? Remember, a lot of times the best trades happen just above the moving average, right? Little trap high up there. Remember that? A lot of times the best trades happen just below the moving average in a bull market, just above the moving average for the sellers, right? So if I can get just above the moving average, little trap high up there, brilliant opportunity here now to be selling off of those highs. Same target, of course, right down at that 32.12 and 3/4. So now we've got ourselves all ready to go here for the buy side and the sell side. Just remember one more thing here. Don't forget, stay out of the middle, right? Stay out of the middle. Buy low, seller failure, sell high, nested failure, right? All right. If you want to go back over it again, right? Rewind the tape, go back over it again. In the meantime, though, we're ready to rock and roll here on the Nasdaq. The Nasdaq's a little bit cleaner than the S&P. You'll see here in a moment, right? Nasdaq's a little bit cleaner Then the S&P, we didn't get that big, collapse off of that measured move like we did on the S&P. So what do we know right on the Nasdaq? We know we're bullish. That's pretty easy to see. We also know that just like the S&P, right, the market was really ugly, really choppy, and then bam, right? Market wakes up at 9:30 and runs. So what does that tell me? It tells me don't be surprised if we see this thing dip down in this area here, right, to get another shot for those buyers, right? We want to be aware that's a possibility for tomorrow. What else do we know? Strong move up into double tops and double bottoms. What is that? That's a trading range. Right? Anytime I see a range, I love to use those expanding triangles, right? Trend lines marking up higher highs, trend lines marking up lower lows. What do we do with a what do we do with a range though? A range is a balanced area, right? So a range is a balanced area, which means there's a magnet right back inside that range. And ultimately, what you're going to see people do when a market's bullish is they're going to wait for the price to get just below the range, and they'll try to use those seller failures and buy it back up. Seller failure and buy it back up, right? We don't trade range breakouts. We fade those range breakouts. Okay, so bottom line is we know the market is bullish. We know we're into a range. We know that buyers are trying to buy underneath the range and go back up into that magnet, right? Back up into that trading range. And the funny thing about this range is you'll notice we're right back to that gap. I left that gap on there. It's actually not a gap anymore. We all know we filled that gap 2 weeks ago. But I'll tell you, boy, they keep going right back to that 91.36 3/4 over and over again. I'm going to keep leaving it right there until they ignore it, right? Because we keep seeing that gap, and we talked about this last week, right? That gap got filled a long time ago, but for some reason, they just keep loving on that area, and they keep snapping back to it whenever they find an opportunity to, basically. Okay, so we know we're bullish. We know we're into a trading range. We know we have the buyers, right, who kind of didn't miss there, but they would have been very aggressive, right, getting in. There's one more clue on this chart, and that is staring us right in the face right now. It's this big move down. Right? Now, this is not the biggest move in the world, but it's a very strong move. And anytime we see a strong move, what do we expect? Another leg in the same direction. And this leads right into what I'm looking to do here for tomorrow. I think the biggest chance we have right now is either going to be a seller failure off this expanding triangle or a nested failure if we really get this market to pull back nice and deep. Right? Because again, the opening bell really sent this market racing higher. So really at this point now, we know we have the range. Range is telling me, of course, to buy low, sell high, and avoid the middle, most importantly. So what I want to do is I'd like to use this strong move down. I'd like to have these bears come over and try to sell into that next pullback so I can then look to buy into those stop losses and maybe get lucky for a pullback combination, right? A seller failure, right? A seller failure into pullback combination. Now, be careful on this because what you don't want to do is you don't want to grab a seller failure back inside the range, right? That's not what we're talking about here. We're not talking about buying inside the range. We're talking about finding a way in by buying into the counter trend or the breakout traders in this case, right? Their stop losses before we get in. Right? That's the key. We're buying into those stop losses and we're using the range as the magnet. There's a big difference there, right? We don't want to be trading inside of that range. So really make sure we get down. Ideally would be get me down into this area, right? This secondary range expansion area, as we call it, right? To the size of that range. Copy and paste it down, 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 right? That gives me now this area right there. I'd love to see us roll over one more and then rip right back up now, right into that trading range. And again, using that seller failure pattern, strong move down, bears come over, they try to sell off the moving average. We know now where their pain is, right? Now we know where their pain points are. Now we know where the bears start yelling, uncle, 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 right? They get out of their positions for a loss, and that's exactly where I want to be buying going back in. We see a lot of these failure patterns, these two-try, breakout failure patterns. And again, you'll learn a lot about these inside of that free trading course. But, I have to prepare, though. What if it really dumps, though? What if it really pulls back? If it really pulls back and it goes through these range expansion areas now I do want to be a buyer. I do want to give it a shot back up to retest the high, because let's not forget, the bigger the pullback, the better the risk reward ratio. Right? So let's not forget, right? These deep pullbacks, they give us incredible risk reward ratios, which is great. However, the challenge with a good risk reward ratio is you usually have momentum fighting against you, right? Because if we go lower here, real strong move down now, what's going to happen? These bears, they're going to think this market's reversed. And even though I don't think they've reversed yet, they're still going to give it the old college try, as they say, right? They're going to give it the old 1, the old 2, before they make the run back up. And that's the pattern we're looking for here. If we get a real strong pullback, I want to buy going back into that range. I want to keep using that gap as the magnet, but I'm going to have to respect the bear's momentum. Let them try once, let them try twice, then I can look again to buy into those stop losses. And again, keep in mind, these deep pullbacks, they oftentimes, when these bears get stopped out, they oftentimes flip their positions and they become bulls. And so the market will run. It doesn't pull back as often when you get those deep pullbacks, so look for that two-try trap. All right, does that make sense? When you get these really deep pullbacks like this, when the bears get whooped, when they get pushed out of their positions, right, the market snaps really strong. And as it's running higher, I don't want to chase after it. I don't want to trade inside the range, so I use that two-try trap pattern instead, right? That impulsive move going higher says, get those higher highs. And again, I'm simply using the same pattern that we used before. All right, it's just like a great chef using the same ingredients in different ways for different dishes, right? The preparing or whatever. Same basic ingredients, just using it in slightly different, more creative ways. And again, we'll do that together tomorrow in the trade room. So now we know how to buy it if we get a shallow pullback or a deep pullback. As we go higher here, right? As we go higher, remember, stay away from the range, right? Look for that 1, 2, 3 break out to new highs. Mark up that high, mark up that low, and buy the low, right, of that hidden channel pullback. Okay, or let's say we just rip higher, right? If it just rips higher here, if it rips higher, pull back for profit taking, higher high, once to the higher high, trap low. You got to look at that two-try trap pattern as we go higher here. Okay, the one thing you don't want to do though is don't try guessing inside that range. If it sits inside the range, wait for it. 1, 2, 3 breakout. Then you know you got your enough momentum. Now find the new hidden channel, and we're buying off the low of that hidden channel, right? But again, if it just rips right through it, okay, profit-taking pullback, higher high, bears come in, trap low for that two-try trap pattern to buy as we're going higher. Now, as we go lower here, how could I be a seller on this market? Being a seller, it's just like the S&P. We want to see that 1, 2, 3, right? Prove to me, bears. Prove to me you can hold that pullback off the moving average. Once you show me proof, then I can trust you. We'll mark up the low there, draw the trend line there, find that hidden channel. You can already kind of see how that hidden channel is starting to brew here, right? And then we look for the short off of that high. Where's my target now? That 9,000 is an easy target, right? That's an easy big round number target. But more importantly though, right, you've got that low down here. So if we do get, right, if we can grab that short, hold on one second here. Get that back on there. If I can grab the short there, right, obviously 9,000 is a big level, but you want to leave that runner, if you got an extra bullet left in the gun, leave that runner down to retest those big time lows here. And you'll notice here, as we're coming out in Asia right now, the market running lower. This could easily pull back though the next few minutes and rip right back higher here. So don't go trying to chase after those things, right, as the market moves lower here. Now we got a pretty good plan there, right, to be a buyer off the low and sell off the high. Again, most important thing is strong move down, right, lower lows, trap high, two-try trap pattern, or most reliable, 1, 2, 3 break down, mark the low, mark the high. We're selling off of that high. Another possibility is we run back into the range with the seller failure. We go back into that range. We chop around for a while. Can I sell above the range? I can, but what pattern do I need? The nested pattern, right? Why? It's against the momentum. 1, 2, and then again, cherry on top is a trap. Yes, you got it, right? We can use that failure pattern, but you want to be a little bit more conservative, a little more patient. Wait for the 1, wait for the 2. If you can get that trap high, bingo, short it back down into that trading range. A great strategy set up for the Nasdaq. Now all we need to do is wait and see what they give us here in the next few hours. We'll update our charts. And again, if you're not with me tomorrow in the trade room, make sure you grab that free course. All the links are in the description of the video or that big information icon in the upper right-hand corner of this video. Let's wrap it up here now with the gold. Looking at the GC, the yellow metal, let's see what's going on here right now on the gold. Now, what do we know about gold? We know we have a very strong bear momentum going lower, right? We can also see 1, 2, 3 legs down. Now, usually when a market goes 3 legs down, it goes into some sort of range, and that's another problem. That's another big clue we have in this chart right now. We can easily see this bear market goes into a range. Right now, what does a range tell me to do? A range with a bear market tells me look for buyer failures to sell off the high, right? Look for nested failures to buy off the low, right? This is really just kind of summarizing everything we've talked about here so far. We're inside of a range, okay? We buy low, sell high, but it's not as simple as just buy low, sell high because of what? Momentum. Momentum is really the unsung hero of a day trader, right? We really have to embrace short-term momentum. As I tell my clients, momentum is your best friend when momentum is going with the trend. Momentum is not your worst enemy, but you have to respect momentum when momentum goes against you, right? So for example, we know right now we've got a lot of bear momentum, but you'll notice as we go higher here, I can't just sell into it, right? I have to wait for those buyers now to try to take the bait, right? And then I can use their momentum against them by simply selling into those stops and trying to get that pullback combination on the way back down into that range. And again, just remember, in a range-bound market, stay away from that middle, right? So as we're trying to go higher here, you don't want to be trying to get into failure patterns like this, right? You don't want to take failures like that. You want to go up. Again, stay patient, wait for those buyers to come in, try to buy that pullback, right? And we can now sell back down into that range. There's a lot of resistance levels up overhead that we can use up there. Again, as I mentioned earlier, anytime I have a range on the chart, anytime there's a range in the chart, I'm always looking for those expanding triangles, right? So I draw my triangle high here, my triangle low there. I also can see, right, so that's a great level of resistance. I can also draw a trend line off these lows, kind of a sneaky little guy here, and then bring that down overhead as well, right? So this whole area up here is really nice because you can also incorporate that pendulum swing down, pendulum swing up. So this area really looks great. Again, the big problem though is I have to wait for us now to get up there. Bears will definitely be trying to sell high. I want to try to time the short right into those buyer stop losses and sell it right back down again. Now, the buyers, of course, they want to go back up to retest the high. So we know how to be a seller on this, right? We know how to sell off the high. We know how to buy off the low here. What would be a breakout? What would a breakout look like? This looks pretty easy, right? A 1, 2, 3 breakout. Now that you know the basics, now you know what to look for, right? Mark up the high, mark up the low, and we now know we're buying off of that low, right? Where's my objective? The objective's pretty easy. We're going back up to retest those 98 half highs, right? That's pretty easy there. But again, right, you're not buying off this first pullback because it's a bear market. You're waiting for that pullback to hold. And I know it's not fun to watch it go without you, but welcome to trading. Welcome to life, right? If you want to get the most reliable stuff, you've got to be willing to wait for that time when everything comes together perfectly, right? You don't want to go trying to predict that breakout because trying to predict reversals, well, it hasn't gone over very well so far, so I don't want to try to do it now. Or I want to wait for that 1, 2, 3 reversal, then find that hidden channel. We're buying the low of that hidden channel. Or, who knows, right? Maybe this thing just keeps on pushing higher here and rips higher. If it really races higher here, profit taking, higher high. Now, a good example of this one, you really don't need a trap on this one, do you? Why? Because where's the objective? It's way back up here, right? Now, you would need a trap, again, knowing where they're trying to go, right? If the market went all the way up like this and then gave you a 2-try, yes, you would definitely need a trap up there, right? You would have to have a trap up there because you wouldn't want to buy into that high. But, assume, right, you get a couple big body candles there, right? It's really ripping higher here. Profit taking once, profit taking twice. I don't need that trap low in this example. It'd be great if we get it. Don't get me wrong. I mean, that would make it even better, but it's not necessary at that point because you've got all that open space up there. So in that case, it's just simply a 2-try breakout. Strong move up, profit taking 1, higher high 2, right? Now, once we see bears trying once, trying twice, now we know what stops are, and all we're doing is waiting for a nice juicy candle. A lot of times what happens is we'll go just below the moving average, right? Again, a lot of times the best entries are just above the EMA, right? For those bears that we saw back here, or just below the EMA, right? For the bulls as we go running higher here. Now, as we go lower, right? So we know the plan as we go higher here. If we do make a run back down to that low and we hold, right? If we do, if we get that run lower, that could also be a 1, 2, 3 breakout, market and sell off the high from there. So 1, 2, 3 breakout patterns are always the most reliable when you're trying to get breaking free of these ranges. If the market does take off, the 2-try trap pattern, 2-try breakout pattern is also a viable setup as well. For right now though, I'm looking to buy low, I'm looking to sell high, I'm focusing on failure patterns. And again, make sure you grab that free course if you're not with me tomorrow morning in the trade room at 8 o'clock Eastern time. So I want you to learn and see a lot more examples of all of these entry patterns. And speaking of tomorrow morning in the trade room, I want to see you there right there with me tomorrow morning because the easiest way to learn this stuff is to do it right there with me. Come in, join me in the trade room tomorrow morning, 8 o'clock Eastern time. It's easy getting registered. I'll put all the links right in tonight's video. So I'll put all the links to get registered for tomorrow morning's trading session, to grab our free trading course. Everything you want is in the description of the YouTube video. Or if you're on the blog right now, I'll put a button right below the video tonight on the trading blog. Or if you're already on the website, it's the advanced course is that you want. Our advanced membership is the only membership that includes a lifetime access to our trade room, all the video classes, all the indicators, the ongoing support. I'll be right there with you every step of your trading journey as an advanced member. So get registered. That way you can be with me tomorrow morning in our trade room bright and early. If I don't see you guys tomorrow morning, or if you're not ready yet to be a member of our trade room, make sure you grab that free trial. The free trial includes our free trading course, a free pass to our trade room, and hundreds of examples of how we apply our favorite trading strategies to our favorite futures markets. Don't forget, I'll be here for the rest of the evening tonight. If you have any questions, don't be afraid to call that toll-free phone number or use that live support right here on the homepage of the website. Keep in touch. I always love talking to you guys, so don't forget to call the office. If you guys have any questions, drop those questions in the comment section below. And if you're still watching right now, hit that thumbs up button for me, right? I always appreciate when you guys tune in every evening on this video newsletter. I'll see you guys tomorrow morning at the opening bell. If not tomorrow morning, come back and see us again next time, tomorrow night, on the next edition of this nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other and get some sleep tonight. I'm sure not many of you guys got some sleep. I still feel like I'm still awake from yesterday watching that Super Bowl. What an incredible game. I don't care who your team was. Man, oh man, what? That was probably one of the best Super Bowls I've seen in quite a long time. I definitely got my money's worth sitting on the couch here in Los Angeles. Hope you guys had a great weekend out there. I'm taking up too much of your time, though, so get out of here. Enjoy the rest of your evening. Come out and join me tomorrow night in the next edition of the newsletter. As always, be well out there. Be nice to each other. Get some rest, and we'll see you guys tomorrow. Adios, amigos. Bye-bye for now.